All right, gang, welcome back to the live trading room. Happy Wednesday to you. Hope your Tuesday went well. Hope your week is going well so far. Had a busy day in the market yesterday, had a lot of opportunities. Ended up getting stopped out for a loss on the dollar Canada trade that we took a look at. A great example of how to use the graceful exit technique. So basically, if you guys are unfamiliar, the graceful exit technique is a technique that you can use to limit your risk or limit your losses once the market tells you that you're wrong. Had a good little day trade on the Canada yen that we spoke about yesterday. Remember, that was a swing trading and a day trading opportunity. Got a first target hit on the day trading side of things. Didn't get a secondary target, but that that opportunity is still going to be in play today. I'll get a video up for you at some point. I got to edit it and whatnot, which I don't think I'm going to have time to today, maybe tonight or tomorrow, but I'll show you guys that. Pretty cool and kind of emotionally frustrating trade. Silver rolled over very nicely. If you guys remember, this was the trade of the day yesterday. We looked at a rising channel. We didn't get the entry that we thought we were going to get initially while we're doing the live stream, but you can see not too long later, we got another doji. We got another inside bar right here, and then the lower low, lower close, and we started diving down. And Orsi had her first target hit. We were looking a little bit lower to the top of this box right here with that 3D2 in the middle as well. And then I got a short last night on the euro dollar, and that's where we're going to start today. And by the way, if you guys are watching on the live stream, thank you for joining. Please don't be shy about asking questions. If you're watching live, you can put them right into the chat. If you're watching on the recording, just leave it in the comment section below. I will go through and make sure I answer them all. And if you are new, hit that subscribe button. Show me some love. Lots of content on the YouTube channel. If you're a regular subscriber, hit that like button. Best way you can support. Now, before we get into the euro dollar, which is going to be a simple trade, we got some more news. More news out this week. It's been a pretty, not a lot of high impact news events this week, but news that is important because it leads into kind of the high impact news that happens at the end of the week. This happens to be the first week of a new month, October. And, well, who can tell me what happens on the first Friday of every month? 99.9% of the time. Every once in a while, it happens on the second Friday. But what happens on the first Friday of every month? We have our stalling time, so you can type it in. Yep, we have our jobs reports. We have non-farm payrolls, kind of the leader of that, but we have stuff like average hourly earnings and all that fun stuff. So throughout the week, you'll see unemployment claims. Today, we have ADP employment change, which has somewhat of a new formula to it, but this is essentially the precursor to non-farms. And then we have some more Fed people speaking later today, as well as our ISM non-manufacturing PMI coming out at 10. So we do have some I wouldn't say super high impact news events coming out today, but we do have news events that could rock the market. As you know, that the market has been walking on eggshells lately. So let's get over to the euro dollar. We're going to start here on the daily, right? Just kind of a recap. If you watch the Trading Edge video, we spoke about this already, but bigger bias for the euro dollar is still short, right? We still have ways to go. And what we're looking to do as trend continuation traders, trend following traders, however you want to call it, is we're looking to take advantage of opportunities of relief, meaning that we are looking to play the extensions. We are looking to get out, sit on the sideline during the relief, and hopefully play the next extension. So if you're asking yourself, what are reliefs and what are extensions, right? This goes back to the basics of how price moves, right? If you've ever seen any of our kind of basic training lessons, or if you've been through the foundation course, you know that price doesn't just move straight up. It doesn't just move straight down. It ebbs and flows and ebbs and flows and ebbs and flows, where we have a series of retracements and extensions and retracements and extensions, right? This is the market breathing. It's like anything else in life. If you don't breathe, you can't continue, right? You need to kind of take a breath, slow down a little bit in order to continue. Random fact, I don't know if you guys knew this. Did you know that if we as human beings were to race a cheetah in a marathon, we would win. So technically, we can outrun a cheetah. Did you know that? Now, disclaimer, right? Because OG is going to yell at me. Don't go out there and try to race a cheetah for social media clout. I know some of you guys will, right? Unfortunately, I see all the stories about people like falling off of cliffs and getting speared by animals just to try to get the perfect Instagram picture. It's horrible. But I learned on one of my deep dives into random natural geographic stuff that, I believe cheetahs don't have the ability to sweat like we do. So although they can run really fast for short periods of time and they would catch us and eat us and kill us, right? After a certain period of time, they have to stop because their body has to cool itself down. It's kind of like a machine. If you keep running on high, on hot, the machine's going to blow up and malfunction. Because human beings, we can run and be active and sweat. It's our body's natural ability to cool itself down so we can keep going, right? So the markets are very similar to that. Or to the cheetah, I guess. It has to take a break. So we have these extensions, right, where price was cheap enough where people wanted to sell it. And then eventually people want to take profit or price or price gets so cheap that it's no longer a bargain. So you get a little bit of relief and then it gets cheap enough again. And then you get a new flock of sellers that come in, they push it down and then they take profits and no one wants to sell anymore. And then we get some relief and you get a new flock of sellers and it keeps happening over and over again. And the hardest part for a new trader, this is one of the biggest mistakes I see traders make. It's, lack of discipline in general, but it's impatience, right? Impatience. Daryl OG says, but if they have eaten you, the race is over. Yeah, that's why I want to put the disclaimer out there, OG. It's theoretically in a computer simulation, but in real life, you would be eaten rather quickly. Tier 1 trading does not endorse that. But one of the biggest mistakes I see with traders is this. They see the move and then they want to get into the move after the move has already been made, right? Have you guys ever felt that maybe in your younger trading days where the move has been made? It's all over the internet. It's all over the news, King dollars, whatever they're shouting. And then you're like, man, I got to get involved. And you get involved too late and you get involved as soon as it starts to show some relief. And of course, you stop yourself out of the trade because, when you're losing money, it's pain and you don't want to be in pain. So the easiest way to get out of pain is to get yourself out of the position. And then the market goes and does exactly what you thought. And you're like, man, I was this close. And the next time I'll just stay in it. And then you repeat the same mistake because pain has that thing where we, when we're out of pain, we think we can deal with it. When we're in pain, we realize we can't actually deal with it. So the key is we have to be patient. And it's extremely hard to be patient because if you look at the market at this point, right? You look at the market, I'll go one more back. If you look at the market at this point right here, right? Does it ever look like the market's going to come back? Do you ever think the market's going to retrace and give you another chance? No. All you see is missed opportunity. All you see is a 500 pip move down and all the money you missed out. And this is why people enter, right? Because again, you would think like, well, why would people enter late? Well, in hindsight, it's simple. Like, of course, I wouldn't enter at the bottom. Just retrace, right? In real life, this is hard because you're seeing all this missed opportunity. The FOMO is pumping hard in your chest, right? I don't want to miss out. I don't want to miss out. I don't want to miss out. Again, if you surround yourself with the wrong types of traders or people on the internet, they're all feeding you the same message, right? Because 95% of the people out there aren't sharing you a realistic message. Remember, 95% of what you hear out on the internet is just a highlight reel. So you don't have a lot of people going out there being, man, missed that $500 move or 500 pip move in the euro, right? Everyone's just talking about how much they made. Everyone's showing screenshots and it's making you feel worse and worse and worse about missing out. So in your mind, you're like, I'm just going to get something. And then again, we snap back to reality and then boom, you're out of it, you're out of it, you're out of it, you're out of it. So the hardest part is being patient. But what helps with patience is the ability to analyze the market. Bright Walter says, I'm learning something today. Good. That's my job. Good. Believe it or not, Walter, a lot of people don't like what I do here because, like you'll get the people every once in a while, come in and just show me the opportunity. And what they don't realize is that the opportunity is pointless. I can show you opportunities all day, right? That's not going to make you a better trader at all. You know, you put a band-aid over a gushing wound, it's not going to fix the wound, right? It'll make you feel a little bit better for a few seconds, and it's going to go back to a gushing wound, and you'll bleed out eventually. So I'm glad you appreciate it. So what helps with the mental side, right, were two things. One, having a trading plan, right? If you have a trading plan, you're not going to enter trades you're not supposed to be in, right? So you should not be in trading opportunities like this. But we know that most people don't have a trading plan. Something that helps is the ability to analyze, right? When you can analyze, and be as good as possible at it, when you can analyze kind of I don't want to say the execution points, but when you have a good idea of where the market is likely to go, then you can basically predict that, hey, we're going to see some relief soon. We should see some relief soon. We should see some type of pullback, right? Because you know that the move has already been made. And that's a term you'll hear me use a lot. So that helps drastically. And then you have to have the patience to wait and wait and wait and wait. So something we've been waiting for here on euro dollar. Again, we pushed out 96 was the thing I called the other day or the other month. We're looking at 92s now, but we weren't looking to get involved down here. We were looking for a move back to our previous level of structure, right? This little shelf right here. This was our previous new structure low, right? We're looking for a return to this area right here for the next opportunity to get short. And we had a few opportunities, right? We go down to the 4-hour time frame. In the weekend video, we talked about looking at a complex pullback, right? That was this guy right here, where we had kind of a fake out double bottom type of deal, right? Not interested in this one right here, but certainly interested in this one, right? Look left, structure leaves clues. We came to a minor level of structure. Looking left, we had Fibonacci inversions, extensions, AB equals CDs, all that fun stuff lining up around here, right? Nice lower low, lower close entry. Got a little bit of follow through, but obviously we went the other way. Well, now we came up to a higher level of structure. Again, if we can take this bigger box and just put an even smaller one right in here, and we got something similar. But this time we had even more to build our case for entry, right? So this time we shoot up. We've got our RSI, RSI overbought. We're at a previous level of structure. We had a nice inside bar right here for consolidation. Then we had a lower low, lower close right here. That was my reason for entry. Stops are above previous structure highs, right around here. Had to get them up a little bit, right? A little bit past the 1 ATR. And I'm looking for a return to our inside level of structure right here for target runs, right? A run to target 1, 98.50s. And then what I'm doing with my secondary target, I'm holding on for a home run with this, right? Because I'm in a bearish move. I still have a very bearish bias on the euro dollar. I haven't done much research on the jobs number this week, so I didn't take that into account, but that could be a mover. But I'm going to hold on for target 2s. Got to worry about target 1s first. That's first and foremost. Get those off, get stops to break even. But target 2s down for the extension lower and ride it as far as we can. So it'll be interesting to see what we could do here. Now, that tells you nothing about the trade of the day here. George says hidden divergence as well. Yep. We're not going to talk about that, George, after yesterday's conversation about confusing people. But yes, hidden divergence. Yesterday, we spoke about the difference between kind of things that confuse traders. And we spoke about divergence versus hidden divergence and how like you end up with paralysis by analysis, where once you learn both, if you're not kind of familiar, if you're not ready to learn both, you kind of sit there with the spinning wheel of death as you kind of like just your brain escapes. But let's talk about alternative ways to enter, right? So there are always, or there could always be multiple ways to enter a trade, right? There are super, super, super aggressive ways, all the way from like a limit order, just at a specific price point, if you're not confident, to, having all the reasons in the world to enter. So for me, a lower low, lower close is an aggressive entry. It's not the most aggressive entry, but it's on the aggressive side. What would be a secondary way to enter. So let's say you missed this, you were sleeping. Let's say you missed this, you're not allowed to enter this way. Let's say you missed this, the risk reward didn't fit your profile. What you can look for is a retest of structure, aka a double top. So we have an extension here. We have an extreme, right? Because we've seen a retracement off of that. If we come back to retest this previous extreme and we hold, we do not violate it, meaning we don't break above and close above, that's going to give us a double top, right? A classic charting pattern in the market. Now, you can combine that if you want with RSI, diversions. You can combine it with other stuff if you want, but that can be an alternative way to get involved in the trade. And it may even give you a better risk reward depending on how that double top forms. So if you're late to this, right, going off the previous conversation we had, don't let that FOMO get you out of your zone. Don't feel like, hey, I've got to enter right now, right? Because again, if you're looking at, well, depends on your risk reward. If you're looking at the risk reward I took, it's something like this, right? The first position risk reward isn't the greatest. It's like a 2 to 1, something like that. Where are we at here? Right above 50, something like that, right? If you enter late and you're aiming for the same target, all of a sudden you're looking at this. This is not a position you want to be in. Now, again, if you're someone that's looking for all the way down here, that's a different story, right? You got plenty of risk reward to work with, but you don't want to be late to this. So instead of rushing in, being late, doing something that you're not supposed to do, putting yourself in a bad position, simply have a second chance entry and give yourself the opportunity to look for a double top. Maybe you get involved up here at the very highs. Maybe you get involved somewhere in here. But either way you look at it, it's much better than being late right here, because that risk reward is going to kill you. It doesn't matter if this trade wins or loses. Over time, if you put yourself in a negative position, you're going to lose money, bigger picture. So potential double top here at previous structure. Again, you can make this a CTS trade. You've got structure, you got double top, you got RSI overbought. You may have RSI. You probably have RSI divergence as well on the double top. So you can probably get a nice little CTS 5 or 6. CTS, for you guys that are not familiar, it's a combined technical score. It's basically a way to quantify the technical kind of things we look for in the market. That way you can have consistency in what you're looking for and what type of trades you get involved in. But a nice, decent secondary opportunity here on the euro dollar. Nikki says, how about fast execution? Not sure what you mean by fast execution, Nikki. If you want to explain that, if you're still here, let me know and I'll answer that question before we get you guys out of here. Live rumors. Any questions about this setup while we're waiting for Nikki's answer? Hopefully he's still here. I'm a little bit late reading it. I'm sorry. Fast execution. Meanwhile, we can dip down to an hourly just to kind of show you what's happening here. See if there's anything juicy on the hourly. Fast execution. You guys got any idea what fast execution? How about fast execution? Any idea what that might mean? No clue. When I hear fast execution, I'm thinking like clicking the mouse as fast as I can. But I think the question came when we were talking about kind of being late to trade. So maybe something related to that. But I don't think Nikki's around anymore. But if you're hearing this, Nikki, and you come back later, just if you want to explain in the comment section below, I'll go back and answer it. But just not sure. How did you set your target ones on the trade? Same way we did yesterday, right? You guys remember the analysis we did yesterday? This was actually a trade. You may have not been here. This was actually a trade that we looked at yesterday. We were just waiting for the execution. So what we did was, and what I always do is first, I look for areas of previous structure, right? Because if you guys remember, we were looking at this yesterday. And the thing that I said was this. I said, you know what? I hope that we go straight up. Because the more we ebb and flow, that's going to dictate where I need to put my targets at. So if we do this stupid little bouncy bounce, right? That's why I couldn't get involved in these areas. We do these little bouncy bounces, it directly limits where I can put my target. So I hope that we go straight up to this level. And we did, straight up to $1. We didn't quite get to $1, right below there. I don't think we touched it. We didn't quite tickle it, but we got right below it. But first, we started off by looking at this period of structure right here. We then took some Fibonacci's, right? Fibonacci retracement, swing low to swing high right here. We got a 3D2 right in that area. We also took our volume profile, right? We want to see if there's any spikes that we need to pay attention to in this previous range, right? We saw that our spikes pick up right by the highs right here. Boom. So we adjusted a little bit, and I'm not technically using the volume profile in my trading. This is, again, a year-long test. I can tell you right now, it will be added to my trading plan come next year, but technically I need to wait until January to do it just because of my rules. But I will be using it, but I like using it. I'm testing it out as if I were using it. So this technically didn't play a role in my target, but it would have. But looking for just a move right to the start, because I'm a pretty conservative trader, right to the start of our kill zone or our previous level of structure. So we have our 3D2 a little bit lower. That's a fine place as well. Again, you guys know I'm pretty conservative, so I'll take the very first sign of danger right here. So a very long way of just saying structure. My trading is pretty boring. Structure, but I did bring in other things to look for any type of confluences. You'll probably have a 618 here. I didn't do this. If we take it from this intermediate move, you'll probably have a 618 there as well. Look at that. Yeah, 618 right in that level as well if you need more confluence. So that's where targets came from. I'm pretty, for reference, I'm pretty simple with my targets. Well, my whole trading is overly simple. Structure. Wait till price gets the structure. Look for opportunities at structure. Once you're in opportunity at structure, look for targets at structure. Where your stops go above structure. Structure. So, all right. Thank you guys for joining on the live stream. We're going to boot you guys out. Tier 1 members, I do have a few other things I want to take a look at, but because I didn't ask you guys yesterday, if there's something you want to run to, let me know. Again, live streamers, we'll be here tomorrow, same time, same place. If you're new, hit that subscribe button. That way you don't miss the goodness that I upload to YouTube. If you are subscribed already, just hit that like button on the way out. That is the best way you can support what we're doing here. Thank you. Trading viewers, do the same thing. Any questions on Euro?